Hello, this is eshing1 from BCS Asset Management, and today we're going to look at the weekly market themes. First of all, we're going to look at the macro, which looks at a better US outlook, but Europe is somewhat worrying. Secondly, stock markets. Tech and financial sectors have hit new highs, and Europe is also rebounding. Commodities. The key question is, has crude oil found a bottom at last? And fourthly, risks. With the VIX volatility index not far off the lows, could this signal complacency and be a risk? Firstly, the macro outlook. This chart on page 4 shows the market US PMI survey in black, which shows a sharp rebound to a 58 reading. We expect the ISM manufacturing survey to follow that, and this highlights that there is a stronger recovery in US manufacturing. So one positive point. Secondly, we can look at this chart on page 5. This shows US initial jobless claims. They are back to economic cycle lows, and that is a positive for employment. Another reason why the US is recovering well. However, despite this, we think that the Federal Reserve can wait. Why? Because underemployment, this black line, is still at 12.2%, well above where it was back in 2007 or even in 2001. So a long way to go to show real recovery in this indicator. Turning to Europe, one worrying sign is this movement in German 10-year bond yields. They started the year nearly at 2%. We are now under 1%. This points to the rising deflation risk in the Eurozone, and we expect the European Central Bank under President Draghi to act, to do something to help the Eurozone. Secondly, looking at stock markets. Here we see the technology and the financial sectors in the US in black and yellow breaking out both to new highs. If we look here at the German DAX index on page 11, we can see that it has underperformed. It has been flat year to date, whereas the world index is up 8.7%, so it's underperformed by nearly 9%, really only since the middle of June. And I think that is a buying opportunity in Germany. Thirdly, commodities. Has oil found a bottom at last? Here we are just under $103 a barrel for Brent crude per barrel. I think it can move higher as we move into the winter season and we see higher demand for heating oil, for instance. This, of course, will be good news for oil exploration stocks and oil services stocks, and those are the two indices shown here, starting to recover. Note here the seasonality for the energy sector. Generally from the end of August till the end of December, we see a very strong upturn in the energy sector. So oil and gas companies tend to do very well. Finally, the risks. Well, for me, the major risk here is this midterm volatility index, the VXV, returning to under 13. So far, it has already come down a long way. If it gets down to under 13, I think that could be bad news. Here we have the US retail sentiment, and it is extremely bullish at the moment. And again, that typically is a contrarian signal suggesting that people are too bullish and the market could correct. To summarize, the US economic recovery seems to be improving, but high underemployment means the Federal Reserve does not need to rush to raise rates. The current risk on recovery is driving tech and financials in the US to new highs, and European stocks seem primed to recover with help from the ECB. We also see an opportunity to return to oil stocks as Brent crude bottoms and starts to rebound. But watch for the midterm VIX volatility index to dip under 13, then the risk return may change. This is eshing1 from BCS Asset Management saying goodbye.